Subprime loans are most often associated with the housing bubble that burst and nearly destroyed the U.S. economy.
In fact, the subprime disaster led to big restrictions for lenders in the housing industry. But Wall Street, Roland Barris, is finding another way to take advantage of risky loans. You've been investigating this.
Yeah, that is for certain, Michelle. Wall Street, of course, loves subprime loans and the profits that they bring, and that's why they are back. Not for houses this time, but for cars, and there are almost no restrictions. Tonight we're on your side with the risk you and the economy could face. Nathan Balsarac just bought a used pickup.
I was a little skittish at first.
He's a low-income college student who barely had a down payment.
I got a little money back from my taxes.
The truck came with 4 cylinders and a subprime loan.
You give up a little bit of higher interest rate.
That's what happens with subprime loans. You pay a lot more interest because you don't have the best credit. But considering this truck didn't cost much, Nathan didn't mind a 21% interest rate.
It's fairly inexpensive to go this route.
Because we're not talking about a $20,000 car, we're going to be talking about a $2,000 car.
Butch Freeman says subprime auto loans have been around long before subprime impacted the housing industry. But in recent years, they're booming.
We found the market expanding rapidly. In today's market, between subprime and buy here, pay here, accounts for almost 50% of the vehicles financed now.
And it's not just the used market. A large portion of new car sales now have interest rates above 4.2%, and a good chunk of those have interest rates above 10%.
Cars are much more of an emotional decision, and people are much more enticed to buy as much car as they can.
That's something that got a lot of people in trouble in the housing industry. Many were urged to buy as much house as possible, even at higher interest rates. When they couldn't make their payments, they defaulted. Wall Street, which was selling their debt, crashed and the economy tanked. So could the same thing happen with subprime auto loans?
I don't think it'll bring the economy down. You may see credit tighten up.
There are big differences between cars and houses, of course. Cars are far easier to repossess, they cost a lot less, and strangely, people are more likely to pay their car loan than their home payment.
The borrower is probably not going to put at risk his or her ability to get to and from work. They'll jeopardize their house because they know, hey, they can default and there's all these rules in place to protect them.
But Meekum says the key is to avoid that altogether by not financing more than 10% of your take-home pay.
If you make $2,000 a month take-home, you've got no business putting $400 a month into a car loan.
Meekum says don't make it emotional, and remember,
whether it's just a basic transportation vehicle like I would sell someone, for a small dollar amount, or you go out and buy a Maserati for $500,000, it's still going to get you from point A to point B.
Good point.
You don't want a subprime loan for Maserati.
No.
I
wouldn't
put it
think
that
so.
way.
Yeah.
If you have good credit, of course, you could get amazingly low interest rates right now for a car. The subprime loans only affect those with poor credit ratings.
Okay, is there any other financial advice, though, for folks buying a car?
Yeah, I mean, if you're in a situation where you have to go for a subprime loan, first of all, financial analysts say, you know what, if you can avoid buying a new car and just stay with the old car for the time being, go ahead and do that. Otherwise, you want to try and pay off as much of the principal on a car as possible so you have a little bit of interest to deal with the subprime loan.
Right. So is there any limit on the amount of interest they can charge for these loans?
Right, you heard that one gentleman, Nathan, 21%, right? Sounds awfully high.
Sounds horrible.
It can
does
go
sound awfully high.
much higher than that. In fact,
Really?
there is no regulation on that. It's sort of like payday loans. Payday loans in this state are not regulated. They can go as high as they want. Most of them are around between 20 and 30%, though.
Be careful out there.
Buyer beware.
All right.
Thanks,
Roland.
Roland.